Ron Barron, a billionaire investor, has stated that he has never bought a bond before and that he invests his capital in the face of rising inflation and the growing debt pile in the United States. CNBC interviewed the chairman of Barron Capital on Friday, during which he expressed his amazingly bullish outlook on the market and stated that he was purchasing assets every day. On the other hand, he went on to discuss the impact that government spending and borrowing have on inflation, as well as the capacity to repay loans. He said that how they repay it is not the same as the government paying off any debt. They pay it back by making your money worth less. Because inflation is expected to accelerate at a pace of approximately 4% to 5% annually over the long run, he calculated that the value of cash will be cut in half approximately every 14 to 15 years throughout this period. After being questioned about the possibility of purchasing bonds, Barron responded, "I've never owned a bond. I also don't have a lot of cash on hand. At all times, I am invested, and whenever I have the opportunity to purchase additional items, I do so." His decision to steer clear of bonds comes at a time when the financial markets have shown a decreased desire for new U.S. debt in the face of growing deficits at the federal level. The auction of $24 billion worth of 30-year bonds by the Treasury was met with a weak reaction from investors on Thursday. As a result, primary dealers were forced to pick up the slack, which resulted in rates increasing. After a spate of lackluster government bond issuances the previous month, this came as a surprise. Considering that deficits are anticipated to continue to be enormous, Bank of America predicted that the overall public debt balance might reach $50 trillion within the next 10 years, which is an increase from the current amount of $33 trillion. Geopolitical conflicts have a significant impact on the markets. The increasing uncertainty that investors are facing is a direct result of the events that are occurring in Ukraine and the Middle East. This may cause some individuals to consider if it is time to adopt a different strategy for asset allocation. Ron Barron, an investor worth $1 billion, continues to be faithful to equities. Be sure not to miss it. Over 25 years, the performance of commercial real estate has been superior to that of the S&P 500. To avoid the hassles associated with being a landlord, here is how you can diversify your property. The stock market has lost the faith of wealthy young Americans, and as a result, they are placing their bets on these three assets instead. For strong long-term tailwinds, you should get in today. A software that has already saved users $800 million can help you save a significant amount of money on your holiday shopping. A question was posed to him in a recent interview with CNBC on whether or not he is still purchasing equities in light of the violence that is occurring all around the world. In response, he said, "Every day. It's incredible how bullish I am." One of the primary reasons that the founder and CEO of Barron Capital favors equity investments is that inflation is a significant market element. Even though the Consumer Price Index reached a new high of 9.1% year-over-year in June 2022, inflation slowed down to 3.2% in October of this year. When there is a war, there is a pandemic, and there is inflation, all of these things are inevitable. He explained that the government is responsible for paying for it. If you can get out of it, then they will be required to pay it back. How they repay it is not by paying off any debt. Rather, they repay it by reducing the value of your money. If you wish to safeguard the purchasing power of your money, this brings about significant ramifications. All the time, I am invested. There are several possible explanations for the rising price levels that we have observed in the aftermath of the COVID-19 pandemic. These include the increased purchasing power that arises from stimulus checks, which fuels demand, supply chain disruptions, which hinder the flow of goods and drive up costs, and an easy monetary policy that keeps interest rates low, which encourages borrowing and spending. Since then, the Federal Reserve has made major increases in interest rates to bring inflation under control. However, the prices of many needs, including food and shelter, continue to be significantly higher than they were when the pandemic reached its peak. As far as Barron is concerned, the phenomenon of rapid inflation is not a one-time occurrence. When we think about things, we believe that inflation will cut the value of your money in half approximately every 14 or 15 years, or by 4 or 5% every year of inflation. This is how we think about things. According to him, it encompasses my entire life. The common consensus is that bonds are not considered to be particularly good investments during times of high inflation and rising interest rates. The values of bonds have experienced a significant decline as a direct result of the Federal Reserve's aggressive rate hikes. This is because new bonds are issued at higher rates, which makes the bonds that are already in existence less appealing. If the fixed interest rate of a bond does not keep pace with the rate of inflation, this would imply that the bond might effectively generate a negative return in terms of real returns, which are calculated by subtracting the interest rate from the inflation rate. Also, you won't be able to locate any coupons for Barron cutting bonds anytime soon. According to the octogenarian who spoke with CNBC, "I've never owned a bond ever. Additionally, I do not have a lot of cash on hand either. To put it another way, Barron is continuing to zero in on stocks. He stated, "I am always ready to invest, and whenever I have the opportunity to purchase additional items, I do so." Inflation is either 5% or 5% of the total. According to me, that is the entirety of my life. In some instances, it is 2% or 7%. Either 4% or 5% is the correct response. Does the idea of acquiring a bond never even cross your mind? I can honestly say that I have never owned a bond in my whole life. The fact that I am always making investments means that I do not have a lot of cash on hand. I make further purchases in Tesla whenever I get the opportunity to do so, and I will give you the sheet before it is displayed. I will do this before the sheet is displayed. In the same year that I started my career in business in 1970, I moved to New York in 1982 while I was in a state of bankruptcy. There was a time when I was known by the name Barron Capital. We had $10 million when MA was in charge of the company, but now we have $41 billion because of their management. $40 billion is the amount of profit that we have. In terms of the money that we manage, the majority of it is comprised of profits. Without a shadow of a doubt, we realize a combined appreciation of $55 billion, and regardless of what transpires by December in the year 2025, we will be back. Is there something that motivates you to have confidence in yourself? Historically speaking, the growth rate in the country has been 7% per year. Multiples are dropping and enterprises are increasing. All of these trends are occurring simultaneously. A rate of inflation of 4% or 5%, with the actual rate in place being 2%. In the past 20 or 30 years, it has had a rapid acceleration in its growth, although in the past, it had been a pace of growth that was intensively concentrated. Every single one of the expansions that have taken place in the United States of America and our country has taken place over the past 200 years. Considering that Barron has been a Tesla mega bull for a considerable amount of time, it should not come as a surprise that he was asked about Tesla. Beginning in 2014, his company has begun making investments in the electric car industry. By the year 2023, the value of the company's shares had more than doubled. However, Barron thinks that there is additional potential that has yet to be exploited. He told CNBC, "Wait until you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year or year and a half." He was referring to the phenomenon that is expected to take place shortly. In an interview with MarketWatch from the previous month, he stated that he anticipates Tesla to reach a market cap of $4 trillion within the next 10 years. At the moment, Tesla, which is also a significant player in the solar industry, has a market valuation of over $753 billion. Without a doubt, stock prices are subject to violent swings, and even Tesla does not always rise linearly. Shares of the electric vehicle manufacturer have experienced a significant increase in value this year. Yet, they are still more than 41% lower than their all-time high in November 2021. Don't forget to like, subscribe, and hit the notification bell for more captivating content. In the comments, share how many hidden gems you uncovered in today's video.